We want to present you the way a business can be started up. At first, the founders have to understand very well what are the resources that are needed to operate. Resources are usually called assets, and these assets in every business are divided into different categories. Fixed assets that are things used for a long period of time, and current assets that are things used for a shorter period of time. Normally they are used up within a year. Then we can start checking each item we have on this prospect. We have to say before to make a further explanation that this prospect is called balance sheet as at the beginning of the year. So in this case, the prospect is issued as at 1st of January 2008. So premises. Premises are buildings where we can locate our offices, and we need absolutely to have premises. The amount of money needed to buy premises is 80,000 £80,000. Then we need equipment for £5,000, and machinery for £10,000, and finally motor vehicle for £8,000. So the total amount for fixed assets needed by the business or by the company is £103,000. Then we can go further and look at the part that we here is titled current assets. We have stock. Stock is represented by the goods we have in our warehouse, but we are still at the very beginning of the business life, so we don't have goods in our warehouse. We can leave this item void. And debtors are people from whom we have bought resources, but for the moment we haven't bought anything. So even this second item must be left void. Bank. We need to have a bank account on which we need to deposit a certain amount of money. In this case, we think that 5,000 pounds will be good. And petty cash is money used in the day-to-day life of business to pay little expenses. So 2,000 pounds will be good for this purpose. Now, what are current liabilities? Current liabilities are amount of money due within a short period of time, but both items are to be left void because we do not have any credit against customers, because we haven't yet sold anything to anybody, and the bank hasn't yet lent us money for short term. So at the moment we can say that the capital employed so far is £110,000. How can we finance all this amount of money? We must ask the bank for a mortgage. A mortgage is a loan, a long-term loan, and we hope that the bank will be willing to lend us the same amount of the premises bought. So we can write here, hopefully £80,000. but £30,000 are left to be financed by the shareholders. The shareholders are the owners of the new company. They have to invest £30,000 to complete the process of financing the business. And in this case, the balance sheet stays balanced.